evolves. Well, for the time being, though, let's move on. TCIExpress, that's a stock on our radar after Jefferies. Well, they shared some interesting takeaways from the management meet. Chander Agarwal, who joins us to detail some of those, takeaways out there. Hi, Chander. Morning. Thanks so much for joining in. Well, Jefferies quote, they quote you as saying that profitability and cash flows is the mantra, even if it means lower revenue growth. Are you taking a dig at some of these new age logistics companies?
All I'm saying is that I'm away from B2C, and so one may not see a very high top line coming along, because of B2C. The fact is that, where we have positioned ourselves, we're doing pretty well, and it's sustainable. So there isn't any change in the targets that we had given in the beginning of the year, and we are still following that. And I've already seen that e-commerce or B2C, that portion has already started coming down in a big way. So our interest also has reduced from 5% to just meager maybe 2% now in B2C. So yeah, I will not see a very high top line growth in B2C.
No, B2C, Chander, hi, good morning. B2C, the market has shrunk, you're saying?
The demand has shrunk. So yeah, for sure. Okay. And maybe because of the high interest rates and all that, it's a given thing, it's globally it's happening. So it's not like something unusual for India.
Oh, well, that's pretty. Could you give us any numbers? I mean, growth rates, or I mean, or what time period are you talking about? I mean, because
from September onwards, I'm already seeing that the B2C has really come down, and I see that it's further going down, and I think this is something which was bound to happen, with high interest rates and all of that. So it's a good thing that we don't have. We have very less exposure in that.
But if B2C comes off, wouldn't B2B follow?
Not really, because the segments that we are in, they are actually kind of, like demand. We're not into FMCG. We're not into, consumer items, or textiles in a large way. So we're not seeing that effect come on our top line. Obviously, the ancillary related products that we are moving, it might see a little correction post Diwali, but that's about it. It's something which happens every year, cyclical. But in general, the demand across sectors is pretty strong.
Just one thing, sorry, when you say B2C, you mean e-commerce, right? Just to be clear. That is e-commerce. E-commerce.
Yeah.
Got it.
Correct.
Rima, sorry.
So what is the B2B industry growing at? What is the B2C industry growing at? And particularly for you, are you looking to realign your portfolio to cater to the segments which are seeing growth and perhaps reduce your exposure to the segments which are slightly subdued?
So we, okay, 3 questions. I can start off by saying that we are already balanced in our portfolio. We are not, heavyweight on one portfolio, and the others are like just a meager presence. We are balanced all throughout. We have like 10 to 11% in the top high yield and high value verticals across the economy. In terms of B2B growth, it's totally dependent on the GDP number, and I always say that we're going to be growing at 2x of GDP, and that's in line with what I have said. So if Q2 GDP was 6%, we've grown 2.5% of that already. So there is no change, and in our numbers that I have given out.
Chander, so earlier you were guiding for around 18% revenue growth for FY23, I think. You're sticking to that with margins in the vicinity of around 17%?
No, about 18 to 20%, and margins about 20, 21%.
20, 21%. Okay, all right. So 18 to 20% is the revenue growth, and margins around 20, 21%. Also, give us a sense about the auto space. I think you have some exposure out there, right? 8 to around 9%. What are the trends you're observing out there?
So, auto, we don't move the vehicles in general. We move the auto components, spare parts that goes across country from the OEMs of the auto manufacturer. We haven't seen any reduction in that because, when cars are not selling, these auto parts are still selling. So I have not seen any degrowth in that in any way. And in fact, they are growing much more than any other verticals that we have.
What's your current capacity utilization?
I think it's about 86%. And yeah.
So steady from Q2 levels, right?
Yes.
And this 2% e-commerce exposure is as of 30th November? And does it dip further?
I don't know. I mean, I think we'll maintain it at that level. It's like, just to be have a presence in that segment. I don't think that being totally out of it will make sense. But we are ready in case ever it grows. We can, jump in and take advantage of that.
All right. What you're saying I guess viewers will be closely watching because, I mean, there are other companies in the space, Delivery, Blue Dart, which have got large dependencies on e-commerce, B2C, and you're saying that is a segment since September which has slowed down sharply. Thank you very much, Chander. I appreciate you joining in. Great speaking with you.